Let's get some common sense with Craig. Craig Bolanos, the founder and CEO of Wealth Management Group, is here. Craig, good to have you on our show. And the Fed's favorite inflation gauge, PCE, last logged in at 3.5%. That's the latest sign that inflation is going down. What's your common sense about what that means for the stock and bond market and the future direction of interest rates?
Well, those are all great questions. I mean, from an investment standpoint, lower inflation readings have caused a rally and a risk-on mode for stock investors, at least near term. Number two, yields in the bond market, well, they moved lower amidst less worry of inflation. That 10-year Treasury bond, which had eclipsed 5% just recently, has dropped all the way down to the 4.5% range. That's great news for pricing of bonds, which moves in the opposite direction of yields. I mean, at WMG, Wealth Management Group, we think that the high valuations, tighter financial conditions, the potential for a hard landing, that's possible, but we really do believe the soft landing is much more probable. I think that should have investors pause and probably continue to maintain a balanced approach to the risk and return that their financial plan needs. And as far as the Fed goes, you mentioned that too, Angela, they're likely done. Yep, I'm saying it. I think the Fed is likely done hiking interest rates. So yields, they remain at attractive levels, and investors, might want to start finally adding a little bit of duration, lengthening the maturities of some of their bonds to lock in these yields. And most certainly, everyone should be remembering that bonds are probably a favorable asset class going forward because of the now high starting yields. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. We exist to help people get retired and stay retired. And if you want to learn more, well, you can. Go out to our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.